Good evening. Ira Epstein of Linn & Associates with your metal market wrap-up. And this wrap-up is for Wednesday, and we're at the 10th of February, 2021, about 5:15 in the afternoon. So we did see today Fed Chair Powell speak before the Economic Club in New York, and he held the line that I wrote about this morning. Before he spoke, I thought he'd come out very dovish. I think he'd say that we need all the programs we can, that there's risk to businesses, there's risk to the workers still. The downside risks are still large. And when asked about his worry about inflation, he said, well, when it picks its head up and gets itself going, we'll worry about it at that time. We have plenty of tools to adjust it, to attack it. But he's not seeing that at this point. He certainly did not come out and say, oh, I think the Biden administration plan is great. But he made it very clear, we need more, not less. And that's what Ms. Yellen is saying. That's what most people are saying. So as we get through the Trump trial, and today was day 2 of that, and finally get to it next week, and it gets behind us, this will become what we're all looking at. Remember, we have President's Day coming on Monday. In any case, the bonds and notes, they are rallying overnight with it. You had a break in most of the stock indices. They actually waffled most of the day, and you're just playing sideways right here. Metals up a little bit. I think copper at the 380 level, which it got up towards, is a little high. And the currency markets, we negated a lot of downtrends, but we haven't begun uptrends. So in the gold market, one of the things I always look at is where is the market in relation to the 18-day average of closes? It's under it. When you're under it, you use that as a bias tool. Whatever tools you have, you need filters on tools. This tells me that with all the other things I look at on a weekly chart, that I still have the bias to the downside. When I go to the April gold as a futures chart, you can see how the market made that lower and low. It has bounced in doing what we've been talking about this week. This now becomes a resistance point. If I remove the chart action here, you get to see how the market was developing that sideways action. You broke out to the downside. When you break out to the downside, you don't forget that action. That's still there, but now it's acting as a block of resistance above you. Traders caught that thought their long position was good. They're getting a chance to come out. Maybe they don't like it. The shorts that were in there, they might be wanting to sell more. You get all the different thoughts of the market going back and forth. I look at the market and I'm seeing a pattern of a lower low and a higher high. We don't know what that is yet. We're only open 15 minutes into the new session. You have to get to the close. If it would close like this, it would be bearish. Why? Let's assume the market finished and this were now 4 o'clock in the afternoon Central Time. You'd have lower highs, lower lows. That would be bearish. Then I'd go and look to see where the 18-day average of closes is. The market is at it or slightly over it. That would give you a friendly bias. The two would wash each other out. But what's really going on is, as I tried to explain, when you get stretched out one way or the other in markets, normally even up here, you would stop at that 18-day average. You didn't. That's one of the few examples. Go on the charts. You'll see more times than not it does. And now you're fighting into that zone. That's what I was looking for. The problem with the bull side of this market is, number one, you need the inflation, and the Fed keeps telling you they're not worried about it right now. Number two, as a chartist, you have first resistance. Now could be just a churning areas, the 18-day average of closes. Then we have the 200-day, as you can see, and then the 100. So we've got a lot of moving averages to get through. That's not easy. The resistance is defined. Also, the Bollinger Band, an algorithm designed to keep the market trading within it 95% of the time. It's combined with the 100-day average at that 1881, 1882 area to offer another level of resistance. Then I put momentum on. So we had gotten oversold. Any readings under 30 are oversold. You did that back here. Now the numbers have climbed back up into the 50s. That's pretty neutral. You're hung right here. We're waiting for whatever the next event is going to be. In the gold-silver ratio, you're staying under the 18-day average, which means silver is stronger than gold. Each number means less ounces of silver. In a perfect world with no commissions, I take in 68 ounces, I get an ounce of gold. That's basically what it would be. In the silver market, like the gold, it's still a confusing picture. The difference is you're over the 18-day average, you're over the 100 and the 200, but you're not getting that pattern of higher lows and higher highs. Rather, you have a pattern of a higher high and a lower low. That is not a trend. Then, to complicate matters, momentum's drifting to the downside while the bias is up. It's a mess. I don't try to make things out of a mess. Copper market, as I said, I think it's getting a bit high here. And I'm the bull. I still think $4 copper this year. But you're getting up there pretty strong. So I can make an argument you want to get back under that Bollinger Band. Maybe there's buying going on right now in front of the Chinese Lunar New Year. We're in China. Tomorrow, people start taking off on their vacations. The formal first day is February 12th, but they start leaving tomorrow. Now, if you looked in China at the CPI numbers and all that I wrote about this morning and were in my subscriber videos, they were tame. Tame in part because China had also come out and told people not to travel for the lunar holiday. They've since reversed their stance on that, so you're getting the stampede, as I like to call it. If you ever been to Europe, ex-pandemic, and you try to go like in the month of August to some of the countries, everybody's on vacation. So the places you want to go, the restaurants, they won't be open. I know. I don't go at that time. I go when I know the places I want to be are going to be open. But in any case, higher lows, higher highs, over that number. So you watch, I think you'll pull back and you wait. Not embedded, just overbought. Platinum, this has been the strong market. Johnson Matthey came out today and they claim that we're still going to operate in a deficit of demand versus production, and the market has picked up on it. And guess what else did? Reddit, out of nowhere. They're talking about it, so they've been driving the market up as well. As you can see today, once that came out and people heard about it, you put a 4% gain in. But remember, the futures market for you Reddit people is not like the stock market. For every long, there's a short. Everything's very different in it. And at the end of the day, it's a commodity. But I'm a chartist. So as a chartist, I have 1, 2, 3, 4 days in a row over it. I'm getting excessive on how many days over the upper Bollinger Band. I'm not also what? I'm overbought. I'm not embedded. In the palladium market, this is the first good sign. I was mentioning it the other time to you. We're starting to get buy signals in this market. Now the resistance, the 100-day average, 2350, 322. You're right there if you look at where you finished up. Resistance way up after the 100-day average comes in at 2428. Support back here. And I think for the first time, I think the pros are buying it on pullbacks to the 18-day average, stops under the 280350. You might get stop and goes in it, but it's watching what platinum's doing, and there is a relationship of platinum and palladium. Last in the dollar index, you got to 90.23.5. So this whole leg to the upside that began in January, yes, this is January, and this was the contra move that so many traders had looked for. They were looking for a lower dollar. Instead, it kept rallying. It ended, as far as I am concerned, on my technique, because we had a pattern of higher lows, higher highs up until today. Today you made a lower low. That ends that wave. Now the market's got to figure out the next wave as I read it in the chart action. One of the things that I want to remind you are these mini contracts. They are growing in extreme popularity. Today, the CME Group, Chicago Mercantile, had their call after their earnings report today, and they were talking in it because I got into it, and you listen to these things. You can read it, by the way, if you go online, too. They have a lot of faith in what these mini contracts are doing. They were even asked about mini contracts in Bitcoin and Ethereum, and they're not ready to do those by any stretch yet, but they're getting volume. They were talking 11,000 contracts a day in Bitcoin, so somebody's allowing the big boys to trade. The margin's 100,000 a contract, just to give you an idea. But these are 1/10 the size, and this is where people are flocking. We're doing a lot of business in it. We charge only $1 a side commission. $1 a side. So you can't tell me, oh, the commissions are killing me. Futures trading, folks, is not the stock market. We in the industry do not get paid for order flow, so we can turn around and say, oh, you don't pay any commission, and we're making it the Citadels and so on paying us. Doesn't happen in the futures market, not in my firm or any other firm that I'm aware of. That doesn't mean I'm right on it, but I don't know that it's going on. So, $1 a side. To get started, here's one way you can read about it. Go to our website, but don't go to the website itself. Type in /micro. You can call my staff. They'll get you set up. $1 a side? Come on. And you're trading 1/10 the risk? I like that. I'm Ira Epstein. You have a good day. Talk to you later.